Awesome. Good afternoon, good evening. My name is Adrian Moreno. I'm with Amor Realty Group, brokered by eXp Realty, and I'm excited to have all you guys here. If you guys want to show your face, feel free. You don't have to be shy. So feel free to show your face. If not, that's totally okay. I'm excited. This is, I want to say, our fourth HUD184 class, Marcia, and it's been about a year. Our first one was last year in June or July, so we're approaching a year since we hosted our first HUD184 class, and I want to tell you, times have changed. I know back in June when we had the class, the market was hot. There was none of these programs we're kind of going to discuss today were around. The HUD184 wasn't as good as it is now, right?
Right.
So I'm excited for all of you guys to learn about this. The presenter who's going to start it off is Marcia Volin. I've known her for, I want to say the last 4 or 5 years, and we've done a lot of great business together, helped a lot of families. She's going to share her story, but she comes with a wealth of knowledge. So, which is great. You have someone who has over 30 plus years of experience in the mortgage business, and she's been doing this program for the last 10 years, since 2012, 2013. So it's great that we have somebody who knows a program, knows the industry, who is willing to go up to bat and help you out. And you're going to find that if you don't qualify for HUD-184, or better yet, if there's a better program that fits your situation, she's going to let you know, because HUD-184 is a great program, but if there's a better program than HUD-184, she won't be shy to share that with you. So go ahead and take it away, Marcia. You should be able to share your
Okay, hopefully this will work. Okay. All right, does it look good, Adrian?
Yeah, there you go. Take it away.
Okay, perfect. So, and we got more people. Adrian, are you going to watch the waiting room? Because I see more people. Okay. So, basically, the HUD-184 program, I need to figure out how to move. The HUD-184 program was actually started back in 1992, and it was basically started by Congress to help Native Americans be able to get homes on tribal land initially. And since that time, it's expanded to where you can actually use the program for, well, in Arizona specifically, you can use the program for anywhere in Arizona. So you don't have to be purchasing property that's on tribal land. It can be anywhere in the state. And basically with the Section 184 loan, you can get into a home with a very low down payment, and the program has pretty flexible underwriting guidelines and rules. And again, it can be used both on and off tribal land. It can be used to build a home. It can be used to rehabilitate a home. And then, of course, you can purchase an existing home or manufactured home, or you can refinance an existing mortgage also with the program. So it's got a lot of features for it. And then, just as Adrian said, just a little bit about me. I won't take too much time with this. I have actually been in the business. This slide is a little old. It's going on 37 years now. So as Adrian said, what I look at when I'm helping somebody get qualified for a mortgage is basically all of the programs that I'm aware of, which is a lot of programs. And sometimes the HUD-184 program is the best program, and sometimes it's not. Sometimes, like specifically if somebody's has been in the military and is a veteran, that may be a much better program to use than the HUD-184 loan. Or sometimes just qualifying can be difficult sometimes with the HUD-184 loan. So again, there may be other options that are available, even if this program doesn't work. I've actually, from Arizona, not originally, but lived in Arizona for a very long time. And I actually live in Colorado now. So I'm talking to you from Colorado, but I still do, the majority of my business is still done from Arizona. And then the company I work for, I won't go into a lot of detail, but I've been with them since 2009, and we've been doing the HUD-184 program for about 10 years now. So we were very excited to get involved with it. had to go through a long process with HUD to be able to be approved. And then I went through a training to get certified to do the program. So basically, who can use the HUD-184 program? So in order to use the program, you have to be eligible for it. And to be eligible, you have to be a member of a federally recognized tribe. And we do require proof of this. So either a tribal ID or sometimes a document called a CIB, depending on your tribe. That documentation is required to prove that you would be eligible to use the program. You can only have one loan, one HUD-184 loan at a time. So if you own a home and it already has a HUD-184 loan, you cannot use it again unless that loan has been paid off. And then at least one person on the mortgage occupying the property has to be, again, that member of a federally recognized tribe. But you can buy the property with other people. So a spouse or a partner or significant other. Co-signers sometimes do not have to be tribal. So not everybody has to be a tribal member, but at least one person who's an enrolled member does have to be on the mortgage and it has to be occupying the property. So in Arizona, the entire state, as I said, is eligible to use the program. There are some states in the country where there's only certain counties that are eligible. The company that I work for, we are licensed not in the across the entire country, but we're licensed in, I have lost track, but probably 30 to 35 different states. So we can often help people in other states as well. If you have family members or anybody that's trying to purchase a home and not in Arizona specifically. The amount of money that you can borrow with the program does vary by county. And the good thing is that just recently went up a couple of months ago. So again, every county is different. So I don't have a slide for how much you can borrow by county because every county can be different. But specifically in Pima County, you can borrow up to $472,030. Maricopa County, you can actually borrow as high as a little over $530,000. So certainly when we talk about your qualifications and where you're looking at buying, we can go over the numbers, but those are, of course, are the two big ones that you know, the different loan amounts. And again, that's the amount that you can borrow. That's not the amount that the home is selling for, but that's the maximum amount that can be borrowed. And again, as I said, you can use the HUD-184 loan to purchase an existing home, either manufactured or what we call a stick-built house. It can be a townhouse, it can be a condominium, it can be up to 4 units if it's considered to be up to a fourplex. So you could buy a single family residence or a duplex or a triplex or even a fourplex. And then if you buy a property that maybe would have more than 1 unit, you may be able to generate some additional income for yourself to help make the payments. You'd have to qualify for the full payment without any additional rent coming in, but you can purchase property that would maybe help you with the payments. And again, you can also rehabilitate a home. So what that means is if you found a home and it needed some work or was just kind of in bad shape, you can typically or often finance in the cost of any repairs that need to be done to the home. So that's a great feature of the loan as well. So why should you use this program? What's so good about it? Well, again, as I said, it has a very low down payment. The down payment requirement for the program is only 2.25% of the purchase price of the house. And that's on for loans over 50,000, which is pretty much 99.9% of the time. So just to give you an example, if you were to buy a home that was listed or selling for 300,000, the down payment on that program is only a little over $6,700. So it's one of the lowest down payments. VA loans do have 0 down payments required. And there's a program called a USDA loan, which is only for rural areas. That's a 0 down, but otherwise the HUD-184 really has the lowest down payment of any other program. Interest rates are really based on market rates. So there's not a specific rate for the HUD-184 program, but it's basically market interest rates, just like other mortgage loans. I actually forgot to take out this bullet point that's next. We just updated some information. So the HUD-184 loan used to have mortgage insurance in your monthly payment. They actually just eliminated that for loans that are effective closing after the beginning of July. So rather than that saying low mortgage insurance, that should say no mortgage insurance. So I apologize. I thought I previewed all my slides and fixed them all, but that I missed that bullet point. So, and again, down below, it'll go into more detail. The program also has what we call manual underwriting, and that basically means that there's not a computer that's actually approving your loan. Some programs strictly are approved by computers, and if the computer says no, you don't qualify, then no, you don't get the loan. The HUD-184 loan is much more hands-on. We can explain things a lot of times, write letters often. So it's a little more hands-on, a little more personalized as far as trying to get somebody approved for the loan. And then again, to reiterate this next little paragraph. So the HUD-184 loan has what's called a guarantee fee, which is a 1% fee, but that's financed in the loan at closing. So it's not paid in cash. And again, there is no monthly mortgage insurance, no annual mortgage insurance. And again, that's effective for loans that close after the beginning of July. So your timing is perfect. Being interested in this program now, it used to be 0.25% per year that you had to pay in the mortgage payment. So this new change, the government wanted to make homes more affordable for Native Americans, so they eliminated that fee. And then the next little paragraph just says protection from predatory lending. And basically that just means that the program does look at the fees that lenders charge. They don't allow for adjustable rate mortgages, only fixed rate loans. So they're very stringent on what can be used, what kind of programs and what kind of fees can be charged. There's also no minimum credit score. And sometimes people hear that and they think that that means that you can have bad credit, and that is not the case. But so we look at the overall credit, not a number. So the program, again, is not driven by what your credit score is. It does look, though, at your credit history to make sure that your credit is acceptable for the program. There's no maximum income limits. Some programs, some of the down payment assistance programs actually limit how much your income can be to actually be eligible for the program. But with the HUD-184 loan, we've done loans for doctors and lawyers making well into 6 figures. So there's no limits on how much your income can be and still be eligible for the program. And then you also can get gift money from family members. Some of the tribes provide gifts or grants to help people purchase a home. So that's also something that we can talk about when we were working on getting you qualified for mortgage. So I want to kind of talk a little bit about what the process is to get qualified for not just the HUD-184 loan, but really it's any loan pretty much is the same. But the HUD-184, of course, we're focusing on specifically. So at the very beginning, what we would do is we want to get you what's called pre-qualified. And basically that is letting you know, as well as Adrian. And then once you find a property, it lets the seller and the seller's agent know that you're qualified to get a mortgage. So there's several steps we go through to get you to that point. So the first is, of course, to contact me. We can do an quick application over the phone, or we can have you do an application online if that's easier for you. So part of that application process is looking at your credit, talking about your job history, any money that you might have saved for your down payment and your closing costs. And just so you're aware, recently we are now able to run what are called soft credit pulls, as opposed to a hard credit hit. We can't use the soft credit report for the actual loan approval, but if we think there's things you might need to work on, or you're not looking at purchasing for several months down the road, but we want to get an idea of what your credit looks like, We are, again, able to do a soft pull where you're not going to have any effect on your scores, but it lets me see the scores and it lets me see what's on your credit. And then ultimately we would have to do a hard hit on your credit, but not at the beginning necessarily. And then, boy, I've got there we go. So what we would talk about during that process, sorry, I had something that was in front of my document. We would talk about your income and what's called your debt ratio. And basically what that is we're looking at the income that would be eligible to be used for the program. And what a debt ratio is your debt ratio is the monthly payments that you have that would be any debt. So that would be the new mortgage payment. That would be anything like car loans, credit cards, student loans, child support, alimony. If you owe the IRS money and you have to make payments, we have to count all of those things in the number called a debt ratio. And there's a certain debt ratio, there's a threshold that we can't exceed with that number. And part of the reason for that is that the program, again, does not want to put somebody into a home that they can't afford to make the payments on. So they're very strict on how much that debt ratio can be. And then there's, once we've kind of talked or done that initial application, there's quite a few documents that I have to get copies of, and I will go through that list with you. It's on the next few more slides down. And we'll talk about all the documents that we have to have copies of, basic financial documents, but there's quite a few that we have to have. And certainly when you're thinking about buying a home, once you have this list, it's a great thing to just start setting those things aside. So once we've talked about all of this, we've looked at your credit, we've gotten the documents, then basically what I do is issue a form called a pre-qualification form. And that's a standard form in Arizona that the realtors all use. It's one of the real estate forms. And basically it lets Adrian, as well as the other parties in the transaction, know that you're qualified for a mortgage up to a certain amount. And basically when I pre-qualify somebody, I'm pre-qualifying you for a payment amount, not necessarily a purchase price. So you do have to keep that in mind. And Adrian's always aware of that as well, because on one home, a payment might be a certain amount, but it might be a totally different amount on another home based on the taxes, if there's a homeowners association, what your insurance might be. So we have to be very careful that we're not getting you owed into a payment that's too high. Once we have that form sent out, and I would send it to you and to Adrian, then you are ready to go look at homes. And that's kind of when the fun begins. My part's all the paperwork and the numbers. And then you're going to go get to search for a home with your realtor, with Adrian. And then once you find the home, you're going to write a contract, and Adrian will cover a lot of this as well. But once your contract is accepted, then we're going to talk about the terms of the loan. We can lock in your interest rate. We can't lock a rate or guarantee the interest rate until you have a contract accepted on a home. So that's, again, something to keep in mind. We have seen rates stabilize a little bit. Hopefully in the next, I don't know, few weeks, maybe we'll get lucky and see them come down a little bit. But they have kind of stabilized. So they aren't continuing to go up as they had over the last year and a half. And then again, once you're under contract, you would typically do a home inspection. And again, Adrian will go over that a little bit more. It's not required for the HUD184 program, but it's often highly recommended. And that inspection is basically just so you know the condition of the home that you're buying. We would then have to order an appraisal, and that's to determine that the property is worth what you're actually paying for it. And then once we have all of these pieces together, we submit the file to an underwriter. And an underwriter is a person that actually reviews everything to make sure that you are fully 100% eligible and approved for the mortgage. Again, based on having 37 years of experience, I am very careful when I pre-qualify people so that I know that if you get under contract that we're not going to get the loan turned down. So we're going to get your loan approved, barring any unforeseen circumstances or issues with the property. But again, that 37 years goes a long way in making sure that you're qualified. Once you're approved for the loan, then we draw up what are called the final closing documents. That's a whole stack of forms that you will go and sign at a title company. You'll take any of your money that's needed for the purchase for the down payment and or closing costs in at that time. And then we review those final documents once they've been signed. And then we send our money to the title company. You have your money at the title company. The title company then records the legal documents. And at that point, Adrian hands you your keys and you are a homeowner. So sounds like a lot, but you know, again, between Adrian and I, we've done this a very long time and we'll make it as easy as possible for you to get into a home. So the documents that we need, as I mentioned earlier, there's quite a list of documents that we do have to have copies of, and it does look like I need to update another screen. I apologize again. So we do have to have a copy of your enrollment card, your driver's license. We do have to have pay stubs covering the most recent full month. So, and that means a full 30 days. So if you're paid every 2 weeks, we usually need 3 pay stubs. If you're paid twice a month, we need 2. If you're paid monthly, we just need 1. We do need your W-2s and or 1099s. And here it's for the most recent 2 years. So in this case, it would now be 2021 and 2022. We created this slideshow last year, and I apologize, didn't see this slideshow or slide on the presentation. Same thing for your federal tax returns. We would need them for the most recent 2 years. So 2021 and 2022 federal tax returns. We always need your most recent 2 months bank statements for all of your accounts, checking, savings, money markets. It's certainly often beneficial to also get copies of any retirement or investment account statements. We don't always need money from those accounts, but it certainly never hurts as far as getting you approved if you have those sorts of assets. And then we do always have to verify rent history for the last 2 years. If you don't rent and you live with family, then that's okay as well. We just typically have to have a letter from that family member that you've lived with them and that you haven't paid rent. Excuse me. And then some tribes actually have what's called per capita income, and that's income from the tribe. And if that's the case, then we would want to document that as well. And so this is not an all-inclusive list. There could be other things that we have to have copies of. This is a pretty normal basic list. If you happen to have been divorced and you pay child support or alimony, or you get child support or alimony, we typically need those documents as well. If you've had a bankruptcy, we might need bankruptcy documents. So again, this isn't all-inclusive, but it's a pretty normal, typical list of the documents that we have to have copies of. So back several slides ago, we kind of talked about what makes the HUD-184 loan so great over other types of loans. So that I've kind of put on this slide some different comparisons of different types of loans. So an FHA loan, which is a pretty common loan for, especially for first-time home buyers, has a down payment of 3.5%. Which in this case, which we've got the scenario at $300,000, that's $10,500 just as a down payment. And FHA does have mortgage insurance monthly, which is in this case, $137 a month. And that's 0.55% annually for the entire life of the mortgage, meaning that number never goes away. That's always part of your payment. VA loans have a 0 down payment loan. I'm not sure what that okay means on the next screen over, probably meant 0. And I'm gonna have to do some more fine tuning here. And then VA loans also don't have any mortgage insurance. There's also what are called conventional loans, and those down payments vary anywhere from actually 3% all the way up to the sky's the limit with conventional mortgages. So it's giving you an example of down payments on those. There is mortgage insurance also on conventional mortgages, unless you put more than 20% down. And that's why that says varies on that screen. And then again, the HUD-184 loan, we're back to 2.25% down, which again, on that $300,000 home would only be a little over $6,700 and no mortgage insurance. So that helps keep your payment lower than most other loan programs. So what makes up a mortgage payment? When we talk about a mortgage payment, people often hear the term PITI. That stands for principal, interest, taxes, and insurance. And again, some loans will also have mortgage insurance. Again, the HUD-184 now does not. And then you'll sometimes pay a homeowners association. And then that's basically what all makes up what we use for qualifying purposes for somebody getting a mortgage. Oh, and that's basically my presentation. So is there anybody that maybe has any questions? I'd be happy to answer any questions. If you have any, of course, we're happy to answer them down the road in the next few days, but anybody have any questions? I don't see any. Guess it's back to you, Adrian.
Okay, great job. Great job, Marcia. Thank you for doing that. Let me get to my part, screen 2. I have 2 screens here as well. So can you see my screen, Marcia? Hold on.
Yes. Yep, I don't see, we see the whole screen, not just the presentation though right now.
How about now?
Yep, there you go. Perfect.
Awesome. Before I start, I just want to say that I'm excited. We're doing these classes. There's a lot of lenders and realtors, unfortunately, and tribal members who don't know about this loan program. And I started this program, you're going to see, back in like 2008 as a loan officer, doing what Marcia did. I did that for 2 years, and then I got into the real estate. And I've been doing this since 2008, and it's right now in 2023, a lot of realtors and lenders don't know about the program. And so I encourage you guys to go out there and let people know about this program, because it's too good to not know about it. We don't want you to keep it a secret. So let's talk about the buyer's consultation. It's definitely a dream in the making. And so my name is Adrian Moreno. I'm with the More Realty Group, and that's brokered by EXP Realty. So I wanted to kind of quickly share a little background about myself. I grew up in Old Pascua. That's me and my 2 cousins there in the Old Pascua. It's a traditional community of the Pascua Yaqui tribe. I went to school for accounting and finance. And right when I graduated back in 2000, I landed a job, and I was a marketing analyst. So if you ever go to Casino del Sol and you put your Club Sol card in there, I was the person who would take that data, and I would invite you to a free show, invite you back for a free meal, or I'll give you some players money so you can play. And so that's what I did. And I also worked the concert, so had a blast doing that. From there, I went to the government side. I was a fiscal manager. That was my last position there. I started off as an accountant 3, and I was assigned to the housing department of the Pascua Yaqui tribe. And I loved it. I helped bring in the financing, creative financing for the education complex. And right there on the res, where next to the Head Start. And then I helped create the health complex over there in Guadalupe. And so I worked there till about 2013. In between the Casino del Sol and the tribe, I started as a loan officer. That's when I started this program, and I specialize in HUD-184. And I just don't do this program just because I want people to know about it. I do the program because I believe in it. I feel there's a huge opportunity for families to know about it and take advantage of if they're going to be purchasing a property. So it's not like I say that just because I don't just talk about it. I also do it. So as you see, 1 out of 4 families I help is using the HUD-184, and then that's my family of 4 kids and my wife. Then this is a quick shot of my portfolio showing that 24% is HUD-184, FHA 30%, and I pretty much deal with buyers, right? 2 out of 3 families I help is on the buying side. So I do help families list their properties, but my cup of tea has been helping people find and negotiate properties. So let's go into how do you buy a home? Guess what? You need money, right? So you need money to buy that house. So one way to buy the house is if you have cash. How many families right now have $250,000, $300,000 just for a house? unless you come from California or some of these other states where they're selling their piece of real estate for $750,000, $1 million, and coming here and buying it cash. Not a lot of families. So what do? You could still buy that house. You just got to get financing, and that's where you meet with Marcia and get pre-qualified. And so this just talks about if you do have cash, we do want to look at properties. I need to look at the bank statement because when we make an offer, I need to prove to them that you have the money to purchase the property. Otherwise, like Marcia said, she's going to provide us a pre-qualification letter, and that's going to say that she's done her background, she's done all the homework, and she says, yeah, you know what? You're ready to buy. And that's a good thing about working with Marcia, because like she says, before you meet with me to go look at houses, guess what? She's going to let you know for sure that you're pre-approved, right? That might take a month, that could take 2 weeks, that could take 2 months. But that's good because the minute we start talking and we start meeting, guess what? We're already going to go shopping. And that, like she says, that's where the fun begins. And then I'm going to start asking, you know, what kind of home you're looking for? What's the location? You know, how many bedrooms do you need? Is there a certain lot size you need? Do you want HOA or no HOA? Homeowners Association. Some families love it. Some absolutely do not want it, right? They just hear either scary stories or they just don't want to be handcuffed on what you can or can't do, right? You want a fixer upper, move-in ready, pool, garage. So that's what we meet and we start looking. So this is the process. Whether I meet with my client first or they meet with Marcia, this is the first stage agent consultation. I take them through this process and teach them the process so they understand and they're more well equipped with knowing how things work. And guess what? Then we home search. One of the things is when once you're pre-qualified and you told me what house you like, we start sending you listings, we start looking at listings, and there's going to come a point where you start saying, hey, Adrian, you text me a listing or you send me a listing, say, hey, why haven't you sent me this listing? And the reason is because the minute it goes under contract, the status changes. Meaning it's harder to get that property, right? And that's what I'm going to explain. So what I do is here it says active and single. We're going to just look and show mainly properties that are active, which I tell people it's like being single, ready to mingle. We're looking at properties that are single, that are looking for that courtship, right? So we're gonna start doing that. Once we start looking at houses, you're gonna know when we walk into a property, you're gonna know whether that's a property for you. We could look at 10 properties, and the minute you walk into that property, you can say, wow, this is it. There's something about it, you feel it, you're like, I'll do whatever it takes to buy this property, right? So that's when I we provide an offer and I start negotiating for you. I start negotiating terms, the price, if they're going to pay closing costs, I negotiate all that. And eventually it could be on the first offer. It could be, they could counter us and say, we don't like your price. We're okay with the other terms, but we want 5,000 more, right? And if you're okay with that 5,000 more, we now have contract acceptance, meaning both buyer and seller have come under a contract. Right. And the minute that happens in the system, when I was saying that things change in the system, it's going to show active contingent. So that's what I mean. Once you go under contract in the system, it's going to show as active contingent. So buyers and realtors know that it's now under contract. Right. And so it's like being in courtship. You're now dating to see if you want to pursue this for marriage or not. Right. And what do I mean by that? Well, there's many different things that have to happen. One of the things is we need earnest funds. I love to teach people this because a lot of people think that you could just come in and you don't need to have any money until closing time. Unfortunately, that's not the case. You do need money up front, right? One of the first funds we need the minute we go under contract, right? Within 24 to 48 hours, we need to deposit money we need to have you go to the bank, and you're going to ask for a cashier's check, or you can wire the funds to the title company, and the title company is going to hold that funds, right? They don't represent the buyer, they don't represent the seller, they act almost like the police of the situation, and they're going to hold on to it. And it's up to me and you to work very closely together to protect that money. Eventually, you're going to find out in the presentation that money will go towards your down payment, but we need earnest funds. How much is earnest funds? Well, I would say a good rule of thumb is 1%. So on that $300,000 example Marshall was sharing of 300,000, 1% is 3,000. You're going to need at least $3,000 up front once we go under contract that we're going to have to give to the title company to hold on to. That could be a negotiating tool. If there's more than one offer, or you're like, I want this house, I don't care. We can put 5,000, we could put 10,000, right? And for the sellers, they're like, okay, this person is serious, right? We want to work with them, because what could happen is, God forbid, right? There's certain ways you could lose that money. And that's why it's very important to have a realtor that knows the process. But if for whatever reason we don't follow the steps on how to receive that money back, you could potentially lose that money. In my 12-year career, it's only happened once over a few hundred deals, but that once was they knew what they were getting into. They wanted to keep going. I said, if you do this, if you take it to this next step, you're going to lose it. They were okay. They wanted the house that bad, and they were going through all this process, and they just ran out of time, right? But it was definitely explained up front. So give the earnest money. The next thing is this inspection period. What I mean by inspection period, let me see if I could show spotlight. Okay, so we go in the inspection period. So once under here where it says the K, where you have this timeline here, we go under contract, it becomes day 0. We have 10 days typically. This is negotiable, but on average, the contract is already states we have 10 days to do our home inspections. It is, like she says, optional, but when you work with me, it's almost not optional unless you're buying a property that is in cash and you're buying it as is. It's so important we do our home inspections, because you have no idea what's going on. We just did a home inspection yesterday for a new construction, and a lot of agents or a lot of buyers don't do a home inspection when they're ready to purchase, to move in. We did a home inspection, and the electrical wasn't good. The sewer, there was valleys in the sewer line. There was you try to open up a drawer and it would hit to another drawer, right? So it doesn't open all the way. So there's a lot that, because these people are, and this is more of a custom home. This wasn't just your DR Horn or Lennar home, this, where they're working fast and they're going in and out. This was more of a custom home. So it's so important to have a home inspector, because now what's going to happen? Well, guess what? We have 10 days to do all our home inspections. So we have a roofer coming out tomorrow. We had a roofer come out yesterday. We want to get multiple things. We had the electrician went out today. He says, you know what, it was some sloppy work. It's going to cost about $1,500 to do it. We had a termite guy go out there, as we do all these inspections, we have 10 days to do all these. It's up to you to also do your due diligence. It's just not up to us. It's up to you guys to maybe do research, drive by the property at night, make sure you're comfortable with that home, because guess what? Before you sign that paper that says you own a $300,000 headache, doesn't it make sense to make sure you do the paperwork, the due diligence up front, right? So once we do our inspections, let's say day 8's here, we've done our inspections. We say, are we good? Yes. Okay. What is it that you would like to request for the sellers to take care of, right? What would you like them to repair? Because even though we bought this $300,000 property, we have the right to say, hey, we wanted this property at $300,000, but we didn't know it had all these challenges, all these problems, all these defects. So guess what? We write it. There's a document we fill out. We say we want all these things repaired. I email them all the inspections so they know that it was a qualified professional doing the inspections, and they could see for sure that it was done. And guess what? Once they get it, they have 5 days to respond to us on what they're going to do. What do they do in those 5 days? Well, they usually call their own inspector guys to say, hey, what happened here? They call their own AC guy that says, hey, why are they showing me this, right? They call their electrician, hey, they're saying that you did sloppy work. They say all this is done, and I'm seeing that some of this isn't working. Why not, right? So, and then they're going to come back to us in those 5 days and say, okay, we're willing to do the roof, we're willing to do the electric, but we're not willing to repair the gate. And let's say they're not willing to change a window out, right? If that happens, it comes back to us, and you have 5 days to decide what you want. So let me rephrase this. We submit our repairs. There's 3 options the seller can decide. They can repair everything. They can say, we're going to do everything, and we move forward, right? The deal moves forward. They can do nothing. They can say, we're not going to buy in. We're not going to do anything. We have other people interested in this property, and I'd rather just quit the deal right now and put it back on the market and let them buy it, right? And if they do that, you still have the right. What do you want to do? What's important to you? Do you still want to keep it? Do you feel like, nah, you know what? It's okay. I was hoping they would do it just because I didn't want that headache to have someone to do it for me, but I'm not going to lose this house over the fence being cracked. I'm going to do that, right? So if you're okay with that, we accept it, we move forward. And then the third option is they could do some of it, but not all, which is probably the majority of the time what happens. They do most of the work, but not all. And if you're okay with what they're doing and not doing, that's okay. So that's this part here, the repair bidser part. The next stage, we're gonna have an appraisal done. Right before Marcia cuts that check for 300,000, guess what? They require her to have a professional go out there to make sure that, you know what, your house is worth 300,000. There's three things that can happen. Another three things, right? One thing, it could appraise higher. What does that mean? He says, you know what, this house that you're buying for 300,000 is worth 320. What do? We stay quiet. We don't let nobody know, right? We don't want the sellers to know, because if we're still trying to figure things out, if we're still asking for things, if they know their house is worth 20,000 more, they're going to be mad at their listing agent, right? And they're not going to do anything, because they're not going to want to sell it to. But we don't tell them anything. We just stay quiet. We let them know it appraised for the 300,000. And when you get your keys at closing, guess what? You walk in the property with at least $20,000 equity. Does it happen? Yes, it does. The second option, what if it comes back at 290,000? What happens now? Now you don't want it. Right? You're like, man, I don't want to pay $10,000 more for this. There's absolutely not, right? So what we're going to do is, the first thing I'm going to do is you're going to give us permission to have that appraisal, because you own that. And we're going to send it to the listing agent and say, hey, as much as we wanted to buy this property for 300,000, it's only worth 290. And we're not willing to pay that extra 10 grand. Right? So then they talk to their sellers and they're like, okay, we'll drop the price. So guess what? Now you're buying that house instead of 300,000 to 290. But what if they don't want to? What if they don't want to drop the price for 10,000? A couple things can happen. They can be willing to drop it only by 5, and you would have to come in with the difference. Or if they don't want to drop it at all, and you say, man, I want this property. I have all this I vision all doing all this, and I don't mind paying that extra 10 grand. Well, guess what? Marcia's going to let you borrow the 290. What happens to the 10 grand? You have to come in with that 10,000 out of your pocket on top of what you have to put for your down payment. Okay. So, and if we can't come to an agreement, guess what? We back out of the deal. You get your earnest funds, right? Your $3,000 you're going to get back to you. But what you don't get back is all the money you spend on your inspections and your appraisal. And you're going to find out in the next slide here, it's about $1,000 to do the inspections and the appraisal. But Marcia does require you pay it up front, because guess what? Let's say we back out of the deal and you don't want to buy a house anymore. Who's stuck with that appraisal bill? Marcia and her company. So every lender out there requires you to pay them up front. It's a third-party cost, just like the inspection, just all that stuff. So that's what I mean. It's important you understand up front what's the out-of-pocket expense. We go during this process, she's like she talked about, there's still this loan underwriting, the processing, she's still doing that. She's still asking you for pay stubs. She's making sure that you haven't gotten any more debt, because guess what? Before you close on your deal, they're going to still pull and make sure that you haven't bought a new car. You haven't bought furniture. So during this time, we ask you to be very frugal and just be cash poor. Just save money. Just save money, right? You're going to notice this is pending and engaged. This means we're probably within 5 to 10 days from closing. A deal close takes about 30 days. So from the minute we go under contract, it takes about 30 days for us to go through this entire process for you to get your keys. And right before we get your keys, we do a walkthrough. We're going to go meet at the property again. We do a final walkthrough and we say, okay, all the repairs they agreed earlier in the process, we make sure that everything was done. And usually they'll provide pictures and receipts, right? But we go visually and take a look. And we also want to just make sure the house is still there, because if it's burned down and you don't know about it and you sign, what happens? You have a $300,000 no house, I guess, right? Because you own it, right? So it's very important. I had a family who we went the day before. We went the day of it recorded. They got their keys. So the next day we recorded, it was theirs. It was a Friday. It was actually Good Friday of last year. And on Saturday, Sábado de Gloria, I get a call and I'm at the church. I'm like, I can't answer. And then I finally walk out and I find out that the refrigerator was stolen, right? What can I do? At that point, I can't do anything. somebody from the day they owned it, they just happened to go in there and take the refrigerator, and you could see, and so that's what we want to avoid. If that would have happened the Thursday before that happened, guess what? We would have made sure before we signed, before we close, our contract says that your refrigerator is going to be here. We need you guys to, so that would have been their problem to replace that, right? So final walkthrough is so important. And then guess what? I say you're closed, you're married to your property, right? You're married, you're now married in this example, right? You're not, yeah, you're married. Closing and you get your keys. So to reiterate, the home buyer cost, the upfront investment is the earnest money, around 1% of the purchase price. It goes to your down payment. It will go toward closing costs, or sometimes return back at closing. If Marcia says, man, you're getting all this other funds from down payment assistance or whatever the case, you can get some of that money or all of it back, right? And this is made out to the title company. These are the third-party fees, the home inspector, the termite inspection, roof inspection is normally free, sewer scope, man, I'm almost requesting that you guys get that done. It's so important, whether it's a brand new house or an old house, you want to take a look. Just because there's roots, there could be something stuck in there, right? And even though the home inspector is having all the water at the same time when he's doing the inspection to see if there's anything kind of keeping it from draining properly, it's still always almost good. Just like in our example yesterday with a brand new house that had the valleys. The appraisal is about $575, $600 nowadays. Other expenses could be, what if the inspector says, hey, you know what, I think you should get the HVAC really analyzed, because he's going to look at the HVAC, he's going to tell you how old it is, he's going to look to see how cold it is, but he's not going to open it up and see everything. That's what a HVAC inspector would do. They're going to be about $125, $150. We could have that done. Today we had an electric guy come out, he didn't charge us anything, right? If you're buying a manufactured home, there's an engineering cert and a couple other things that need to be done, but these are third-party fees that you pay. The down payment depends on the type of loan. If you do the HUD184, it's 2.25, right? Closing costs. Closing costs, I would say, is something you should factor in. A lot of times right now in this market, I would say 75% of the time, we're having the sellers pay that for you. So on a $300,000, I would say it's estimated around $6,000 to $8,000. That on top of the down payment, on top of the third-party fees, the closing costs have to be paid, right, at closing, right? That includes the loan fees, the title escrow fees, prepaids, all that kind of stuff. But in certain situations, 75% of the time, we're asking the sellers as we negotiate, hey, we're willing to give you $300,000, but we want $7,000 in closing costs. So we're going to fight to get that paid for you, right? There's some properties here in Tucson, we don't have the best inventory, unfortunately, and there could be bidding wars that happen. So in that case, we're still trying to get some, but that's where having a realtor who has good relationships, who can, who can negotiate those for you is super important, because the last thing you want to do is lose a property that you absolutely love for a couple $1,000s, right? And then these are just other ways of, if we're able to negotiate more, there's ways to buy down the interest rate. And then there's a home warranty. Home warranty is normally, we're asking the salaries on top of the closing costs to pay for. That costs around $700, and that protects certain things for about a year. If the refrigerator breaks, if the AC goes out, there's certain things that it covers, right? And then this is just my team here. I created a team just because there needs to be more agents out there going out there and helping families. And these are the people I've kind of taken under my wing and I'm out training. You have Medardo Medina, aka JR, Veronica Virone, Tita Adams, Stevie Johnson is our transaction coordinator. Patrick Cruz is a brand new agent, just joined the team, very young stud, background in baseball, and now I'm the team lead. But I share this with you just so you understand the process, but it's so important. I want to say that you get somebody who knows the program. I can't tell you how many times that agent, when you submit an offer, so think about this, if a listing agent's never heard of the HUD184, they have two offers, who are they going to pick? They're going to pick the one they're familiar with, right? So it's so important that, I'm not saying to choose me either, right? I'm just saying this is more of an education thing for you guys. Just choose a real estate agent who knows the program. Because guess what? When I submit a deal, I'm calling the agent, I'm building a relationship, and I'm saying, hey, have you heard of the HUD-184? No, what is that? Boom. This is what it does. And I'm showing them the confidence that I say we're gonna perform. It's something that, I've been doing for the last 15 years. And so by the time of the conversation, not only have I built relationship, but two, they now know I have the confidence, or they have the confidence now that they could go to the seller and say, hey, we got this deal. I haven't heard about this loan. I'm educated, but this kind of makes sense now. I even have Marsha call them. She calls them or she'll email them, right? So it's a community. It's a team effort. It's not me. It's just not Marsha. It's Marsha, me, and the family we're assisting. So that is a couple things that, like Marsha said, I just want to reiterate, there's no income limits, right? A lot of people think of HUD, right? They think HUD-184, they think it's a low income program. No, this is a loan program that is as good as, if not better than, a lot of these other loan programs. And so if it's as good and better than a lot of these other programs, why don't people know about this? Right? And that's what I'm here to do. That's what Marsha's here to do. We're here just to help advocate, and we ask you not to keep this a secret, because it is such a powerful program. You could keep more money in your pocket because your down payment is lower for those rainy days, to once you buy the property, now buy furniture, right? So hopefully you guys enjoy it. We have a couple minutes left. First, I want to thank you guys for your time, for being willing to come out on a Wednesday afternoon at 6 o'clock. I know there's a lot of baseball starting up right now. And you could be doing other things than sitting here with us, but we want to thank you for coming out, and just thank you for the opportunity to have this time to share with you. So with that said, any questions you guys may have that you guys want?
Yeah, I have a question. This is Raven. So my husband, I had remember seeing one time in a presentation that you have to have like 2 years of like a consistent, like, because my husband does construction. Does he have to do like be like with the same company for like a certain amount of time, or?
No,
Okay.
no, I can jump in and answer that. So no, we do have to have a 2-year work history, but you don't have to be on the current job for 2 years. So the only thing where we could run into problems potentially is if somebody was unemployed for a period of time, and a period of time is really anything over 6 months, that you would have to be back on a new job for at least 6 months to use the income. But construction, especially, if he goes from one job to another and is pretty consistently employed, and again, have at least a 2-year full work history, not on the same job, but at least 2 years of history, then we should be able to use that income.
Okay. And I guess my next question is, because I'm a stay-at-home mom, and we're just really living off of his income. We don't have like any debt or anything like that. His credit is, we're just trying to work on it. He has like a 590 right now. But everything's good on there. There's no like derogatory marks or like anything like that. Everything, like, he actually has a perfect payment history. But I guess I'm wondering, like, I'm thinking about going back to work just so we can try to work towards, getting a house. So you were saying about the ratio, like income ratio or whatever. What should we strive for, like, for income for I don't know, I guess, would he be able to do it with just his income, or like, would you suggest, what would you suggest?
Well, that's an impossible question to answer until we can go into more detail personally. We probably don't want to do it on the phone with 10 other people on the call. So we would want to talk about what your husband's income is, and then, figure out what the debt ratio with just his income. And then we can talk about what difference it might make if you go back to work. Now, again, keep in mind, if you've been a stay-at-home mom for a long time, you'd have to be back on a job at least 6 months. And we would have to be able to verify prior history, totaling at least 2 years total. But you'd have to be back to work for 6 months. So yeah, we'd have to know the specifics as far as what his income is, what the debts are, but we can do that. Also, I know, since you said it on the phone, a 590 credit score, credit scores, like I said, for the program, there's not a minimum score that you have to have, but credit scores can make a difference on interest rates. So certainly if we have time, that sometimes there's things that we can do to help get that score up to get you a better interest rate. So, and again, we can do a soft pull on somebody's credit so that it's not hitting your scores. But would let me be able to tell you what maybe potentially could be done to get the scores up.
Okay, all right, thank you.
Oh, of course.
Question, Raven, and feel free to reach out to Marsha outside of
anytime.
and then you guys can discuss.
Yeah, for sure, I will. I'll be doing that. Thank you.
Well, one thing that just came to mind, and I think Marsha mentioned in the presentation, is as long as one person is a tribal member, that's all you need, right? So you could be a couple, and if as long as one person is tribal, not both people need to be tribal member, just one has to be from enrolled in a recognized tribe. So keep that in mind as well.
How do you guys find houses on the tribe?
Well, I'm sorry?
How do you find houses that are for sale on the tribe?
So Linda Alvarez, if you're talking about the they're on the Vasco Yaqui reservation, Linda Alvarez would be your contact for that. She's the one in helping trying to coordinate that kind of program right now.
Okay.
So Ana Duran, thank you. Great question. I would start with Marsha. Reach out to Marsha, and if you guys would like, I could email you guys all a copy of the presentations. But do you have Marsha's number?
I'll go ahead and give you, so my phone number, and I'll say it a couple times. So my phone number is the best number for me is my cell phone number. That number is 602-228-7324. Again, it's on the presentation, but 602-228-7324. And typically when we start and do just a quick initial talk, usually we can cover a lot of things in just like 10 or 15 minutes. So we're not talking about taking a lot of time to get an idea of what you can do. That's certainly not enough time to get you fully qualified for a mortgage, but that's going to give me a really good idea, and then you a good idea of where we stand, and be able to talk about what we need to do moving forward. And please leave me a message. If you get my voicemail, I always return my phone calls. But if somebody just calls and I don't know the number, don't just assume I'm going to call back, because there's too many spam calls anymore. So leave me a message. I will always return your phone call.
Awesome. Any other questions? All right. Well, if you guys do have questions and we hang up, if you guys have my number, or go to that registration link just to get back in contact with me, reach out. I'll be happy if it's something I can't answer that's part of Marsha's program. I'll give you Marsha's contact, or I'll say, hey, for this question, you'll have to have Marsha to answer that. But other than that, don't hesitate to reach out. We want to be a resource for you all. And if you know anybody looking to buy or sell, let us know. And keep in mind, this HUD184 is an assumable loan, which means if you find a family member or a friend who has a HUD184 loan, there's a chance that the interest rate might be lower than what it is now. And we can share with you how you can purchase that property and assume their mortgage. And there's more to it than that, but just know it's an assumable mortgage, and it might be a good strategy. Other than that, reach out, and all I ask is just don't keep us a secret. If you know anybody's looking to buy or sell, keep us in mind.
Thank you.
Awesome, you guys.
Thank you.
All right, you guys, have a good night.